Welcome to the PHG family. We're glad to have you join in today as we talk about some new things associated with the Advanced Child Tax Credit. Today I have with me my colleague, Michelle Schalmo, CPA, been with us 15 years plus here at the firm, primarily doing bookkeeping and payroll and tax returns for small businesses and individuals and etc. She's going to share with us some things about this new law that came under the American Rescue Plan Act, signed by the President Biden back in March of this year. So, Michelle, glad you're here, and hopefully you can give us some great tidbits about this new advanced child tax credit.
Hi, Nathan. Glad to be here.
She's going to share some of these things that are in the provision associated with that particular child tax credit. So, Michelle, share some of these things in the podcast today that can help them and things they need to know for the next steps.
So, yes, many of these provisions are for 2021 only. The two big changes are the age range now includes children who are 17 in 2021 rather than having to be less than 17. Also, there's an additional $1,000 to $1,600 increase, so that goes from $2,000 to $3,000 for children ages 6 to 17, and from $2,000 to $3,600 for children under 6 years old.
So, it gets a little complex. And so, what are some of the steps they need to take to qualify? Now, the rules very clear about certain provisions for qualifications. So, what are some things they need to do?
Correct. So if you don't qualify for 2021 and you know you're not going to qualify, you are able to unenroll yourself from receiving these advanced premium credits. The qualifications are currently looking at your last filed tax return, so either 2019 or 2020. So if you know your income is going to change dramatically from your last filed return to 2021, or for example, if your divorce agreement says certain parents get to claim the child in certain years, and you know you're not going to get to claim your child for 2021, then you might want to unenroll. Otherwise, you'll have to repay the payments you receive with your 2021 return.
Yeah, IRS has set up a online system to assist you to determine if you're eligible for these advance payments and how you can manage these payments. But what happens, I guess there's a period of time that this is going to happen. When does it start and when does it end? So they can be watching their bank accounts. And if you haven't filed electronically where you had your bank account information in there, you're going to have to visit the IRS online system to set up the account and to get things going. So share a little bit about that, Michelle.
Yes, if you haven't already started receiving these premium credits, it's possible that the IRS does not believe that you are eligible for 2021. The payments should have started July 15th, and they would be roughly 1/6 each month of what they expect for you to receive for half the year. If you haven't received any payments yet, you can go online and confirm if you're eligible or update your information to let the IRS know that you are eligible. And you can also update at that time your mailing address if that's changed, or give banking information in case the IRS didn't have that already.
Yeah, so when we talk about online, we're talking about going to the web of irs.gov, and there you should find a tab in regards to the child tax credit and how to go through that process. While we're talking about various things about children credits, why don't we just add in an item on the dependent care credit? These are some things that you could take advantage for your tax return of 2021. And Michelle is going to give a couple ideas or insights about that as well.
Yes, so for 2021, there's been a big increase in the dependent care credit that you can take. In the past, you could only take up to 3,000 per child per year, and for 2021, you can take up to $8,000 per child per year for child care services. And in the past, you could only take up to 35% of your actual out-of-pocket qualified expenses. Now you can take up to 50% of your out-of-pocket qualified expenses.
Well, these are good things. I know that going back to the child tax credit, if you are divorced or you're a separated taxpayer, there are special rules in regards to qualification and who gets those particular deductions. So if you're in that particular category, we encourage you to go to irs.gov and to assess some of those things that are required for who gets the qualification of that child and the related benefits. And Michelle, you have anything to that we need to be aware of, or anything you'd like to add in closing?
Yes, that's good. Going to irs.gov, looking at the advanced child tax credit section will also show you the income thresholds where you might phase out, and that's where you can unenroll or update information if needed.
Well, Michelle, thank you for sharing the great insights with us, and we hope that you've learned something. If you have further questions or just trying to understand things, feel free to call in at the Phillips Harvey Group. We're here to help you. Have a great day.
Thank you.